Welcome to the China Show. President Trump is set to address the nation in just a few moments to give an update about the war in Iran. Is likely to be some sort of victory speech as well. Will he do enough to satisfy markets here at this moment, measure pace here when it comes to how Asian markets are waking up to this speech here today? But we are just moments away. I'm Yvonne with David Ingles.
Yep, a very good morning to all of you. Thank you for joining us. And we are, as we were just pointing out here, counting down minutes away from this primetime address coming out of the U.S. president. Expectations are high. That is an understatement. You look at where markets are trading, the direction of travel the last 24 hours, particularly in the last 2 hours. This continued move to add more risk on oil prices. We're back below 100 on West Texas and Brent. Just keep in mind, splitting the difference, we're still up 30% from the time the war started, but equity markets are somewhat moving forward. There's a separate angle, which we'll get to later, of course, when you look at the price of equities, which is the tech component, but we could save that for later on as well. Yeah,
is he going to deliver an address that is market friendly? Certainly, we're looking to see if he addresses the inflation concerns, of course, given the energy shocks here and really the inflation aftershocks as well. As Joe Matthew, our colleague, was talking about, $4 at the pump is already a reality in the U.S. So how he tries to reassure the American people or even the world about where energy prices are going to go is certainly going to be a key focus for, of course, oil traders out there.
Yeah, certainly the domestic, you're right. The domestic focus is 4, could get to 5 when you look at some analysts. Here we go. The U.S. president is set to address the nation and also the world here at the White House. Let us listen in to President Trump.
Thank you very much. My fellow Americans, good evening. Let me begin by congratulating the team at NASA and our brave astronauts on the successful launch of Artemis II. It was quite something. It will be traveling further than any manned rocket has ever flown and will very substantially pass the moon, go around it, and come back home from a distance that has never been done before. It's amazing. They are on the way, and God bless them. These are brave people. We want to God bless those 4 unbelievable astronauts. As we speak this evening, it's been just 1 month since the United States military began Operation Epic Fury, targeting the world's #1 state sponsor of terror, Iran. In these past 4 weeks, our armed forces have delivered swift, decisive, overwhelming victories on the battlefield. Victories like few people have ever seen before. Tonight, Iran's Navy is gone. Their Air Force is in ruins. Their leaders, most of them, terrorist regime they led, are now dead. Their command and control of the Islamic Revolutionary Guard Corps is being decimated as we speak. Their ability to launch missiles and drones is dramatically curtailed, and their weapons, factories, and rocket launchers are being blown to pieces. Very few of them left. Never in the history of warfare has an enemy suffered such clear and devastating large-scale losses in a matter of weeks. Our enemies are losing in America, as it has been for 5 years under my presidency, is winning, and now winning bigger than ever before. Before discussing this current situation, I also want to thank our troops for the masterful job they did in taking the country of Venezuela in a matter of minutes. That hit was quick, lethal, violent, and respected by everyone all over the world. After rebuilding our military during my first term, we have by far the strongest military anywhere in the world. And now we're working along with Venezuela and are in a true sense joint venture partners. We're getting along incredibly well in the production and sale of massive amounts of oil and gas, the second largest reserves on earth after the United States of America. We're now totally independent of the Middle East, and yet we are there to help. We don't have to be there. We don't need their oil. We don't need anything they have, but we're there to help our allies. Tonight, I want to provide an update on the tremendous progress our warriors have made in Iran and discuss why Operation Epic Fury is necessary for the safety of America and the security of the free world. From the very first day I announced my campaign for president in 2015, I have vowed that I would never allow Iran to have a nuclear weapon. This fanatical regime has been chanting death to America, death to Israel for 47 years. Their proxies were behind the murder of 241 Americans in the Marine barracks bombing in Beirut, the slaughter of hundreds of our service members with roadside bombs. They were involved in the attack on the USS Cole, and they carried out the countless other heinous acts, including the just horrible, bloody atrocities of October 7th in Israel, something that most people have never seen anything like it. This murderous regime also recently killed 45,000 of their own people who were protesting in Iran. 45,000 dead. For these terrorists to have nuclear weapons would be an intolerable threat. The most violent and thuggish regime on earth would be free to carry out their campaigns of terror, coercion, conquest, and mass murder from behind a nuclear shield. I will never let that happen, and neither should any of our past presidents. This situation has been going on for 47 years and should have been handled long before I arrived in office. I did many things during my 2 terms in office to stop the quest for nuclear weapons by Iran first, and perhaps most importantly, I killed General Qasem Soleimani in my first term. He was an evil genius, brilliant person, a horrible human being, however, the father of the roadside bomb, and he lived just horrible what he did. Iran would have been perhaps in far better, stronger position. Had he lived, we would have had probably a different conversation tonight. But you know what? We'd still be winning and winning big. And then, very importantly, I terminated Barack Hussein Obama's Iran nuclear deal, a disaster. Obama gave them $1.7 billion in cash, green cash, took it out of banks from Virginia, D.C., and Maryland, all the cash they had. He flew it by airplanes in an attempt to buy their respect and loyalty, but it didn't work. They laughed at our president and went on with their mission to have a nuclear bomb. His Iran deal would have led to a colossal arsenal of massive nuclear weapons for Iran, and they would have had them years ago, and they would have used them. It would have been a different world. There would have been no Middle East and no Israel right now, in my opinion, the opinion of a lot of great experts, had I not terminated that terrible deal. And I was so honored to do it. I was so proud to do it. It was so bad right from the beginning. Essentially, I did what no other president was willing to do. They made mistakes, and I am correcting them. My first preference was always the path of diplomacy, yet the regime continued their relentless quest for nuclear weapons and rejected every attempt at an agreement. For this reason, in June, I ordered a strike on Iran's key nuclear facilities, an Operation Midnight Hammer. Nobody's ever seen anything like it. Those beautiful B-2 bombers performed magnificently. We totally obliterated those nuclear sites. The regime then sought to rebuild their nuclear program at a totally different location, making clear they had no intention of abandoning their pursuit of nuclear weapons. They were also rapidly building a vast stockpile of conventional ballistic missiles and would soon have had missiles that could reach the American homeland, Europe, and virtually any other place on earth. Iran's strategy was so obvious. They wanted to produce as many missiles as possible, and they did, with the longest range possible. And they had some weapons that nobody believed they had. We just learned that out. We took them out. We took them all out so that no one would really dare stop them. And their race for a nuclear bomb, a nuclear weapon like nobody's ever seen before. They were right at the doorstep. For years, everyone has said that Iran cannot have nuclear weapons, but in the end, those are just words if you're not willing to take action when the time comes. As I stated in my announcement of Operation Epic Fury, our objectives are very simple and clear. We are systematically dismantling the regime's ability to threaten America or project power outside of their borders. That means eliminating Iran's Navy, which is now absolutely destroyed, hurting their Air Force and their missile program at levels never seen before, and annihilating their defense industrial base. We've done all of it. Their Navy is gone. Their Air Force is gone. Their missiles are just about used up or beaten. Taken together, these actions will cripple Iran military, crush their ability to support terrorist proxies, and deny them the ability to build a nuclear bomb. Our armed forces have been extraordinary. There's never been anything like it militarily. Everyone is talking about it, and tonight I'm pleased to say that these core strategic objectives are nearing completion. As we celebrate this progress, we think especially of the 13 American warriors who have laid down their lives in this fight to prevent our children from ever having to face a nuclear Iran. Twice this past month, I have traveled to Dover Air Force Base, and it's been something. I wanted to be with those heroes as they return to American soil, and I was with them and their families, their parents, their wives, their husbands. We salute them, and now we must honor them by completing the mission for which they gave their lives. And every single one of the people, their loved ones said, "Please, sir, please finish the job," every one of them. And we are going to finish the job, and we're going to finish it very fast. We're getting very close. I want to thank our allies in the Middle East, Israel, Saudi Arabia, Qatar, the UAE, Kuwait, and Bahrain. They've been great, and we will not let them get hurt or fail in any way, shape, or form. Many Americans have been concerned to see the recent rise in gasoline prices here at home. This short-term increase has been entirely the result of the Iranian regime launching deranged terror attacks against commercial oil tankers in neighboring countries that have nothing to do with the conflict. This is yet more proof that Iran can never be trusted with nuclear weapons. They will use them, and they will use them quickly. It would lead to decades of extortion, economic pain, and instability worse than we can ever imagine. The United States has never been better prepared economically to confront this threat. You all know that. We built the strongest economy in history. We're going through it right now, the strongest in history. In 1 year, we've taken a dead and crippled country. I hate to say that, but we were a dead and crippled country after the last administration and made it the hottest country anywhere in the world by far, with no inflation, record-setting investments coming into the United States, over $18 trillion, and the highest stock market ever, with 53 all-time record highs in just 1 year. It all positioned us to get rid of a cancer that has long simmered. It's known as the nuclear Iran, and they didn't know what was coming. They've never imagined it. Remember, because of our Drill Baby Drill program, America has plenty of gas. We have so much gas. Under my leadership, we are #1 producer of oil and gas on the planet, without even discussing the millions of barrels that we're getting from Venezuela. Because of the Trump administration's policies, we produce more oil and gas than Saudi Arabia and Russia combined. Think of that, Saudi Arabia and Russia combined. And that number will soon be substantially higher than that. There's no country like us anywhere in the world, and we're in great shape for the future. The United States imports almost no oil through the Hormuz Strait and won't be taking any in the future. We don't need it. We haven't needed it, and we don't need it. We've beaten and completely decimated Iran. They are decimated, both militarily and economically and in every other way. And the countries of the world that do receive oil through the Hormuz Strait must take care of that passage. They must cherish it. They must grab it and cherish it. They can do it easily. We will be helpful. but they should take the lead in protecting the oil that they so desperately depend on. So to those countries that can't get fuel, many of which refuse to get involved in the decapitation of Iran, we had to do it ourselves. I have a suggestion. Number one, buy oil from the United States of America. We have plenty. We have so much. And number two, build up some delayed courage. Should have done it before. Should have done it with us, as we asked. Go to the Strait and just take it, protect it, use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the Strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing, and the gas prices will rapidly come back down. Stock prices will rapidly go back up. They haven't come down very much, frankly. They came down a little bit, but they've had some very good days over the last couple of days. We've done actually much better than I thought, but we had to take that little journey to Iran to get rid of this horrible threat. With our historic tax cuts, where people are just now talking about receiving larger refunds than they ever thought possible, they are getting so much more money than they thought. That's from the great, big, beautiful bill. Our economy is strong and improving by the day, and it will soon be roaring back like never before. It will top the levels that it was a month ago. I've made clear from the beginning of Operation Epic Fury that we will continue until our objectives are fully achieved. Thanks to the progress we've made, I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death. They're all dead. The new group is less radical and much more reasonable. Yet if during this period of time no deal is made, we have our eyes on key targets. If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, because it would not give them even a small chance of survival or rebuilding. But we could hit it, and it would be gone, and there's not a thing they could do about it. They have no anti-aircraft equipment. Their radar is 100% annihilated. We are unstoppable as a military force. The nuclear sites that we obliterated with the B-2 bombers have been hit so hard that it would take months to get near the nuclear dust, and we have it under intense satellite surveillance and control. If we see them make a move, even a move for it, we'll hit them with missiles very hard again. We have all the cards, they have none. It's very important that we keep this conflict in perspective. American involvement in World War I lasted 1 year, 7 months, and 5 days. World War II lasted for 3 years, 8 months, and 25 days. The Korean War lasted for 3 years, 1 month, and 2 days. The Vietnam War lasted for 19 years, 5 months, and 29 days. Iraq went on for 8 years, 8 months, and 28 days. We are in this military operation, so powerful, so brilliant, against one of the most powerful countries for 32 days. And the country has been eviscerated and essentially is really no longer a threat. They were the bully of the Middle East, but they're the bully no longer. This is a true investment in your children and your grandchildren's future. The whole world is watching, and they can't leave the power, strength, and brilliance. They just can't believe what they're seeing. They leave it to your imagination, but they can't believe what they're seeing, the brilliance of the United States military. Tonight, every American can look forward to a day when we are finally free from the wickedness of Iranian aggression and the specter of nuclear blackmail. Because of the actions we have taken, we are on the cusp of ending Iran's sinister threat to America and the world. And I'll tell you, the world is watching. And when we do, when it's all over, the United States will be safer, stronger, more prosperous, and greater than it has ever been before. May God bless the men and women of the United States Armed Forces, and may God bless the United States of America. Thank you very much, and good night.
Welcome back. You're watching, of course, our special coverage of the U.S. President's just now concluded prime time address to the nation and to the world around updates around Iran. Something that stood out to me, at least, is when you look at, I'm just judging here by the market reaction, is that there has been no major update in as far as the end is concerned, and the message markets are taking, looking at this risk-off move across assets. Dollar higher, oil is higher, stocks are down. Is things could get worse before they do eventually. Hopefully the president is correct in that in several weeks things get better. Let's bring in Joe Matthew, our Bloomberg Balance of Power co-anchor, joining us from Washington with his takeaways. Joe, what stood out to you?
Well, it's interesting. He talked about getting rid of a cancer, as he called it, that is long simmered, which is a nuclear Iran. But the president did not provide any new evidence of an imminent threat, as many hoped that he might, nor did he promise to reopen the Strait of Hormuz. Remarkable to hear him point to the countries of the world, he said, that do receive oil through the strait. He said they must take care of that passage. They must grab it and cherish it. They can do it easily. The president said the hard part's done. When this conflict is over, the strait will open naturally, suggesting we may wind down our involvement in this conflict before the strait has reopened. And he has teased this idea over the past couple of days. Other than that, it was largely a composite of what the president has written on Truth Social over the past 48 to 72 hours here. There was not a lot new in this speech. He said, we don't have to be there. We do not need their oil. We don't need anything they have. We're there to help our allies, which would also run counter to much of the messaging that we've heard from the administration. And in many cases, the ideas and themes of the entire MAGA movement, which, of course, align with the America First movement and the lack of foreign entanglements. The president saying we don't have to be there. Many might also ask, then, why are we there?
Joe, he also said we will hit them hard the next 2 to 3 weeks, and still threatening strikes, right? If Iran says no deal, we will hit the electric plants in Iran if there is no deal. We never said regime change. Are we getting more clarity still about the objectives of this war and what the U.S. is trying to achieve?
Well, I guess they are narrowing down, maybe crystallizing some of those objectives. Of course, we have to note the president has said just this week that regime change has already occurred. He has said that we've already won and that we have eliminated the nuclear threat. He talked about achieving the core strategic objectives, and he did list them: eliminating Iran's Air Force, Navy, and its defense industrial base, and keeping Iran from having a nuclear weapon. He said are nearing completion. These are also ideas that he has said that have already been accomplished. So that 2 to 3 week timeline is important here. The president did say just in the last 24 hours that that's about how much time that we would need to have left. I don't know if he's assuming that our NATO allies will start populating the strait or how that gets reopened, but it could take more than 2 or 3 weeks for that to happen, of course.
And Joe, just I guess a final question. That headline that just dropped, it's a red headline that Yvonne just mentioned there, that they will be hitting the electric plants if there is no deal. What do we know about any diplomatic conversations that are potentially taking place as we speak?
Very little, which is the issue. We've heard of Iran trading messages, but Iran has so far said that there are no formal talks underway, even though the president has pointed to Steve Witkoff, Jared Kushner, and even the vice president of the United States, J.D. Vance, as at least being prepared for real negotiations. He's touted progress in these talks, but at every turn, Iran has said that that's not true. So it's difficult to know exactly where this stands here. With another 2 weeks, the president still threatening Iran's electric plants. That, of course, along with his threats prior to hit the country's desalination plants, would run counter to the Geneva Convention. So if that is in fact the final ultimatum here, without the strait being reopened, we may have learned something again tonight.
Joe, great to have you. Thank you so much. Joe Matthew there, our Balance of Power co-anchor, joining us from D.C. this evening. Joining us now from Virginia is Bilal Saab, Senior Managing Director at Trends U.S., the independent research and advisory firm. He also previously served as Senior Advisor in the Pentagon's Office of the Undersecretary of Defense for Policy. Bilal, thank you so much for joining us. And, just under 20 minutes this speech, markets seem to be interpreting this as maybe 2 to 3 weeks. That timeline might be still too optimistic here, and they think that there's still quite a lot of uncertainty, possibly. What's your take of the speech from the president today?
Long story short, we could put it under the microscope and analyze every single word he said. But long story short is that just like any other speech, some truths, some exaggerations, some lack of clarity, and also some things that were just simply not true. I was actually struck the most by the insistence on the assumption that the greater military pressure you apply on the Iranians, the more likely that they would concede on some of the things that we're asking them to do, including opening the Strait of Hormuz, giving up the nuclear material that they have, that is bomb-grade material, close enough at least, and then rupturing any relations with those regional actors that we find problematic. We're nowhere near close to any of those things. But I was actually comforted by the fact that the president specifically mentioned military objectives. There's a big difference between military objectives and strategic objectives. The military objectives have largely been met. We have decimated their Navy. We have decimated much of their military capacity. They never had any air power to begin with, frankly. But all of that stuff could be easily rebuilt. The strategic objectives are vastly, unachievable, frankly. And obviously, I wasn't expecting any detail about the timeline of that, what is the exact strategy to get there, and so on and so forth. I'm not buying the argument that the strait is going to reopen naturally. I don't even know what that means. That's the whole point of this entire conflict right now. Also don't agree, and you guys obviously are the experts on this, that just because we don't import oil from that part of the world doesn't mean that we're not affected by the global price of oil. As a matter of fact, you could just easily see that we are. And so that whole notion that it doesn't matter what happens in the Strait for us, and that if the NATO wants to take care of that problem, so be it. That is obviously a misinterpretation and an erroneous reading of the entire global energy markets.
Bilal, David here. Do you think we're at least better off in terms of understanding what the ultimate objective is, which I think my interpretation on what the president said, and I want to see what you think about this, is the military objective could in fact be the strategic objective.
Well, look, if once again, if you want to look at the metrics of military destruction of Iranian capabilities, there's a lot of data to verify that. Fair enough. So you got the check on that one. But then what? Like I said, you could still rebuild all of that military capacity that they lost. And in my opinion, the top priority remains, and you've heard it in the speech as well, is to take away that highly enriched uranium, because it is our number one priority. And we're nowhere near close to that, right? And so everything hinges now on what we agree on in the negotiations, and whether, if there is no deal, what do we do after that, right? And we're going to deploy ground troops in that part of the world, whether to invade Kharg and apply more military pressure on the Iranians to concede. Well, once again, it will go back to that very challenging assumption where it seems like the administration is insisting on it. The harder we hit them, the more likely that the Iranians will concede, except that proposition never takes into consideration how the Iranians have responded to that. It's not like they don't have any options, and they have exercised those options. They have escalated themselves. Right. So it comes down to a game of chicken. Who's going to blink first? And who's got greater tolerance to absorb the risks and the costs and the economic pain? So far, they have shown that they are more willing to absorb costs than we are. And so if you're going to drag this for weeks and weeks, and then you can hear the president saying, previous wars in which we were involved lasted years, months, and so on and so forth. I don't see us, frankly, lasting that number of years or that number of months, frankly, and absorbing all these economic costs down the road. I still think that the Iranians have a plethora of options to really escalate and cause tremendous mayhem in the global energy markets. We're not there yet, but if we were to escalate further and send ground troops to that part of the world, the Iranians have already threatened that they're going to hit critical infrastructure, energy infrastructure in the Gulf, which itself will cause the price of oil to spike. And then, of course, cause all sorts of mayhem in the Gulf states, which itself will cause greater instability, which will affect, once again, global energy markets. So, yes, decimated militarily, but boy, do they still have a number of options that they haven't exercised yet. It could get, as one of your colleagues said, a whole lot worse, and it's not going to get any better, frankly, before it gets worse.
And we've seen what Iran can do, right, given the tight grip that they've had on the Strait of Hormuz, Bilal, which you mentioned. I want to go back to the part where the president said, where he encouraged nations that have relied on Middle East oil to really buy from the U.S. This delayed courage, he says, to go to the Strait and take it, protect it. The hard part is done, so they should open naturally. What would that look like? I know you said it's not going to happen naturally. Do the Gulf nations have to take part in this conflict to finally reopen the Strait of Hormuz? Should they take part in this war?
Let's start with one of the biggest and perhaps most disturbing revelations of this conflict when it comes to the NATO countries is the realization that they have so little naval capability, right? Even the old British Empire, which was ruling the entire world with its navy, nowadays we've realized that they have so little naval capability that they can really not rely on to open the Strait of Hormuz. Now, let alone the much more inferior Gulf nations who have never invested in military power, in maritime power, despite the fact, counterintuitively, that their economic livelihoods depend on their ability to sell oil through that major choke point. And so when it comes to capability, let alone willingness, let's just assume that they are more than willing to do this, even though they were massively alienated by this administration. As you very well know, they've been treated badly and all the complaints that they've issued against the administration. But let's just assume that they have all the willingness in the world to really contribute. Even if we have that, they don't have the capability. And even if they do have some capability, the issue of the Strait of Hormuz is never about capacity and volume. It is such a narrow strait. It's not really about more ships traversing that. It is much more about exercising enough pressure on the Iranians to open that strait. And I don't think the NATO allies, let alone the United States itself, has been able to crack the code of how much pressure you can apply against the Iranians to open that strait. And so I don't find the option of relying on NATO or the Gulf states credible at all. We ourselves, the most powerful nation on the planet, are having such tremendous difficulty, both operational and strategic, to crack that code. There's no way we're going to rely on the Europeans to do it for us.
Bilal, we were hoping, I'm going to use that word now, we were hoping that this address would perhaps go far enough so as to give us more clarity on what the path is forward short term. Let me ask a direct question. Are we any better off right now than we were 30 minutes ago in terms of understanding where this heads short term?
No. If you're going to apply military metrics, I think the American people, who's the main audience in this speech, obviously, this is not for the expert audience. The military metrics that you're going to use are going to show that we are making tremendous progress. Strategically speaking, no, not at all. Did you expect the president to provide you with details on that? No, that's not his MO. Did you expect the president to give you a timeline? Also no. He prefers to be unpredictable because he genuinely believes that unpredictability works in his favor and in the favor of the United States and its strategy. I was not expecting any, frankly, details or really digging deep into what kind of a strategy he's going to employ moving forward. This was more to calm the waters, perhaps the global energy markets, and provide an overview to the American people of where we are and what kind of progress we're making. So he hit on some of those, right, because there's some data to validate it. But strategically speaking, no, I'm as confused as to what we're going to do next as I was like half an hour ago.
Well, one simply just has to look at markets to, at this point in time, of course, let me just qualify that in terms of time reference, that the opposite was achieved in terms of calming markets. Bilal, thank you so much for joining us. Bilal Saab there, Senior Managing Director at Trends. U.S., an independent research and advisory firm. For our Bloomberg subscribers, you can turn to your terminal for more context on this. There is an ongoing blog, TLIV Go. That's the function that takes you to this effectively homepage here, where it takes you through everything that we've seen so far, from market reaction, commentary, and the latest headlines that are certainly affecting your money at this point in time. Speaking of session highs, is the chart you see top left of the blog, which is the price coming up shortly on your screens. We were below 100 going into the speech. We inched back above 100, and as far as oil prices are concerned, can we look at oil, please, if we can? And at the moment, we are, last I checked, at about 106. So we've added about $6 a barrel on that as well. There we go. So 105.50. Gold has been behaving like a risk asset, so it is on the back burner right now. U.S. assets coming up on your screens. U.S. futures are down. Dollar, I believe, is stronger. Treasuries are coming up, should be to the downside. There we go. So yields would be trading higher at the moment. And VIX futures, indicative of, again, bets that this actually does get more volatile moving forward, up a tick or two. Nikkei, Kospi, Taiwan, and European futures, this should show all red on your screens. There you go. Going into the nitty-gritty of the Japanese and Korean defense names coming up on your screens, this should go the opposite way. And really, to the point our guest just made there, we're no better off in as far as the understanding of how this ends and how we get there. And it seems that we're back to square one in some ways here.
Or just another reversal from what we saw the previous day, when there was hope that the U.S. might be ending this war, even if it means the Strait of Hormuz is effectively shut. But the threats to strike infrastructure in Iran if there is no deal, I think that was the biggest takeaway for the market here, that this might not end and might get worse than it is currently right now. So that certainly is the key reason why you're seeing defense certainly catching a bid here. And risk assets, of course, there you go. In the China session just opening up just 6 minutes ago, we are starting the day in Shanghai to the downside about 1/3%. Shanghai crude, though, interestingly enough, hasn't really reflected the changes so far. We actually are seeing those futures lower by 1% here this morning. But you are seeing, when it comes to stocks, large caps here, largely speaking, not a whole lot of conviction to the upside. Let's take a look at what it comes to Hong Kong. Well, CATL could be the bright spot here, just given what we've seen with EVs and stuff, right? So what we heard from the likes of BYD, their overseas shipments basically have, in some ways, it looked a lot better than what's happening in the domestic business. Just goes to show, the market and people are a bit scared of what this means for oil prices, and maybe it is time to maybe electrify and buy an EV. So BYD is a good indication of that. Big question is, right, how long lasting is this sort of extension of exports for the company, given the fact that there's so much uncertainty, and will people actually be buying big ticket items like cars, for example? So there you go. The EV space, they had delivery numbers that came through here for BYD, NIO, Li Auto as well, but we're taking a look at most of the tech space. It is mostly lower. So the growth stocks, tech stocks, you see what SK Hynix is doing, you see what Samsung is doing. We saw massive sort of big drops during the speech. That is filtering through and following through here in the Hong Kong session. We have Alibaba down more than 1.5%. Xiaomi, Meituan also seeing losses of more than 1% here right now. Renminbi is seeing some weakness against this, so the dollar is gaining a little bit more during and the speech here as well. So that is one thing to watch, right? It's still the safe haven of choice, it seems, right now. And I think this all points down to oil prices, really, Dave, at this point, and where we are in terms of how it correlates to risk assets and the like. And I think you've been breaking it down really on what oil, what is most sensitive to oil now. Yeah, the sensitivity measures, 30-day correlation across markets to the current price of Brent. Yes, so what we've done is obviously stronger dollar, higher oil price is a stronger dollar. Everything else is negatively correlated to varying degrees, right? So when you get to the fixed income space, the biggest exposure, I guess, in terms of susceptibility to a spike in oil prices is really fixed income, and that goes into the inflation component as well. The CSI 300, to the point we were making, right? The constituency of this market in terms of the banks and the energy plays perhaps makes Chinese mainland benchmarks less correlated to oil, but still negatively correlated, I think is also worth pointing out. It's also worth mentioning, right? Oil at extreme levels will obviously make things behave differently. So a move in, $65 to $70 in oil is not the same as 100 to 110. Yeah. 100 to 110 will create a lot more
dispersion than we do get with 65 to 70, which pretty much you can ignore. But yes, this is how things stack up for now. Just keep this in mind, of course, in terms of if oil does spike even higher, perhaps this is more useful than if things fall. Right. Let's bring in Stephanie Leung, Chief Investment Officer at StashAway, with your takeaways from that speech, if there is any.
Yeah, obviously, the market didn't get what it wanted. I think yesterday there was some, I guess the Wall Street Journal reported that Trump is going to announce a withdrawal of U.S. troops, and the market rallied on that. And I guess the market gave Trump a second chance, some more time to kind of maybe think about his strategy. So I think this is what we get. Trump is saying, okay, I know now that I can move markets back up if I do something, if I announce that we're going to withdraw, and therefore I still have some time. Now, let's think about his constraints, right? His constraint is of course, the midterm elections later in the year. That's still months away. The other constraint that he has is, there's still, I guess, the U.S. is pumping out oil from its strategic reserve. That's set to sort of end by the middle of April, in fact, April 19th. So from now till then, he still has, as he said, like 2 to 3 weeks. So I think actually what happened was the market gave him a chance to further try to push again his agenda and to try to see if they can actually force the Strait of Hormuz to open in the next 2 weeks.
It's interesting. The market has shifted a little bit, right, in terms of positioning. Right before it was just the shock of energy prices and the inflation concerns.
Yep.
Recently, they've been discounting maybe the growth impact as well. Do you think that's been enough, and could that reprice further?
Yeah, I think, for example, what you've seen is the market repriced things very, very quickly. For example, last week, the market was actually pricing in Fed interest rate hikes by the end of the year, and yesterday the market was pricing in a Fed cut, actually. So I think a lot of things are very, very fluid. It depends on what's happening in the Middle East, what Trump decides to do, and I guess going back to my point about the constraint is that if oil prices stay longer for, let's say, more than 2 weeks, then there will be significant impacts to global growth. There will be significant impacts, of course, to the U.S. Inflation picture. So far, it seems like things are still okay, right? If you look at the latest flash PMI, that's still in expansion. If you look at the real-time U.S. consumer kind of data, credit cards, spending, they're still all very, very healthy. Remember, we have the One Big Beautiful Bill that's ongoing. AI CapEx is still ongoing. So all these kind of positive tailwinds that we had a few months ago are still very, very strong. Now, of course, the unknown is how long is oil prices going to stay high. And I think this is something that perhaps, Trump would be able to affect in some ways. And yesterday, he actually tested the market a little bit on that. And that gave him a bit of confidence that he can actually try to use these 2 weeks to sort of try to come up with something. So, what is
safe to own now?
Good question. And I think, actually, interestingly, a lot of very crowded trades have unwound quite a lot, right? One very good example, gold. A lot of people ask me, our clients ask us, okay, why is gold coming down? Despite being a safe haven asset, like theoretically it should be going higher with war. And the simple answer is that, gold was a very, very crowded trade just a few weeks ago. And there was a lot of retail buying, there was a lot of momentum funds buying. And therefore, just with all the other kind of momentum trades unwinded because people need to take position off. But a lot of these are actually very, very good kind of longer-term investments. Gold is one. The AI story that I mentioned, still going very strong. So some of the memory names have sold off. For example, NVIDIA is now trading at, 20 times forward earnings. With its growth prospects, it's becoming cheap, right? Microsoft is down 30-something, 40%. So these are kind of, I think, good names that investors can think about for the longer term. Now is a good time to start to think about it.
The memory side of things has been wobbly of late too, right? Just given the fact that there's all these tools that are coming out that maybe, the big tech names, I think it was Google this week that came out with these tools that basically said you don't need that much memory to really... Yeah,
it's more flash now than the other.
What do you make of those sort of concerns?
Yeah, I think, obviously technology advances, right? And the innovation that Google has come up with has more to do with inference memory usage. But if you think about the exponential growth in AI usage, in inference, in training, I think that overwhelms the technology kind of improvements. OpenClaw is one good example, right? When you spin up agents, I mean, you use like much more of the inference computing. The other thing to remember is that I think if you look at historical bubbles, bubbles tend to happen when there's too much money going into a particular sector. Now, of course, there's a lot of AI capex going into AI, but the bottleneck is actually the chips, right? Actually, TSMC has been the gatekeeper of bottlenecks, and there hasn't been, I guess, enough opportunities for money to go in. And therefore, I believe that as long as TSMC and the memory guys are kind of supply constrained, the AI cycle can last a lot longer than previous cycles. So, I mean, when there's not enough kind of supply and there's a lot of money trying to go in, I think that prolongs the cycle.
All right, Stephanie, thank you so much for joining us here. Stephanie Leung, Chief Investment Officer at StashAway. Now, the war in Iran certainly is creating an opening when it comes to China, right? So Beijing now has a chance to present itself diplomatically as a defender of the rules-based international order. That's really the take from our Bloomberg senior geoeconomics analyst, Adam Farrar, who joins us now live from D.C. Adam, thanks so much for joining us so late into your evening. Before we get to the China angle, I just want to get your take on the President Trump's speech. And it seems like the markets are taking it in a bit of a disappointing way that, it doesn't seem like we got clarity in terms of the objectives, or at least the strategic objectives. And there is still, for the president, leaving room for some sort of escalation. Overall, what stood out to you?
So I think you're spot on, right? The key takeaway here was that the president did not take this opportunity to declare victory and wind down U.S. combat operations, and instead actually laying out to the American people the broader argument that he's been making over the last several weeks, both in his news conferences and via social media, of the necessity of this war, and that 2 to 3 more weeks, as he said, is required for the United States to accomplish its objectives. And not surprisingly, markets are deeply disappointed to hear that. But what's most interesting is that he reiterated moves is not part of U.S. objectives, and rather he sees it as both other countries' problems to reopen and also simultaneously the potential for it to simply reopen on its own at the conclusion of hostilities. And I think that raises real questions for what the flow of oil, natural gas, and other goods through the Strait will look like at the end of this conflict, and will certainly not calm those who are concerned both in markets and also the economies that are reliant on that, particularly in Asia.
Adam, I like how you framed it. The president framed the U.S. as someone who came in and dealt with a neighborhood bully, but is prepared to finish that job but leave the neighbors to deal with the fallout and whatever and how much that costs. I then need to look at the other neighborhood and look at China and your piece that goes into this. And in what way do you think China stands to benefit? And what do they need to do to step into that gap? Or do they simply have to do nothing to benefit from this?
So I think the first point is to be clear that China is certainly not happy with the situation, right? The instability in the Middle East and the potential for long-term uncertainty and instability in the oil and gas market is not good for a country that still remains heavily reliant on the import of both oil and natural gas for its economic growth. But at the same time, within that moment, there are real opportunities. And as you said, the question is, how much do they have to do versus just stand around and see it happen? On the sitting back and watching side, there's a really big impact that the United States is facing now from the drawdown of some of its most advanced weapons in this conflict, particularly when we consider their long-range cruise missiles like the Tomahawk or their advanced interceptors, which are so essential to taking down drones and ballistic missiles coming in that Iran has been launching, particularly on the Gulf countries. Both of those have drawn down significantly in this conflict. And the reality is that the United States defense industrial base is simply not positioned to currently rebuild that stockpile in a timely manner. And that leaves the United States potentially very exposed for any potential military contingencies in the Indo-Pacific. And obviously, we don't know if China is going to move forward with anything in that regard in the near term. But in the next several years, the U.S. will have less options as it looks towards its military planning. Separately, Chinese are also getting a front row view of what the United States way of war looks like right now in 2026. And while I'm sure there's some concern about the effectiveness, how effective the U.S. was, particularly in the initial phase of the conflict, they are also an opportunity to learn from that and prepare for what the United States might bring in a modern conflict as the U.S. deploys new weapons like its own drones, its new missiles, and new tactics to take on Iran's capabilities. So I think it really depends on how you want to look at it. I would also just emphasize that on the diplomatic front, there's certainly a messaging angle here that Beijing is seeking to take advantage of.
Can you talk about the economic opportunity too? Because, obviously China has been on a years-long transition to really kind of shed itself from external reliance on oil, supply chains and the like. Might it actually be, the alternative here for many Asian nations that, could, shift to China in some ways as an oil supplier and really kind of a regional partner during this crisis?
Absolutely. I think what we're already seeing is that there are potentially short-term positive trends and then those longer-term trends that could both be economically positive for Beijing, but also help solidify economic ties and therefore also diplomatic ties between a variety of countries and Beijing. And in the short term, what we're already seeing is that China is stepping in quietly to address some immediate shortfalls in specific refined product in Southeast Asia. We've seen deliveries of jet fuel and diesel to the Philippines and Vietnam, just as those countries are suffering from a lack of specific inputs given the closure of the Strait of Hormuz. Separately, more generally, I think there's this reinvigoration of the desire to electrify economies and find renewable sources of energy that would allow countries to limit their exposure to geopolitics and the threats from events like this in Iran. And as we know, the number one producer of those goods is China. And we're already seeing that a little bit in the markets, as you guys have talked about here with BYD and other electric car manufacturers seeing sales go up. But we're also going to see that on solar and wind power, which China dominates the sector.
Adam, as always, fantastic context, sir. Thank you so much for staying up. As well, Adam Farrar, there, our Bloomberg Economics senior geoeconomics analyst, and of course, Adam's expertise is the Asia Pacific and the angle and the implications for this part of the world. Speaking of Asia, just look at markets. We're about mid-morning session across some markets. First 22 minutes into the cash market session in mainland China and here in Hong Kong at the bottom, 0.9%. Korea is leading these declines currently. Lots more ahead. This is Bloomberg. Right, welcome back. Oil prices are back above 100. In fact, back above 105 on Brent. It's 104 just below that, of course, in West Texas. So largely the takeaway from market is largely disappointed in terms of whether that off-ramp was clear. So we are getting further premiums being built into the markets. U.S. and Euro futures are also going to show you the same message here.
Yeah, I think as Adam Farrar mentioned, right, I think markets were expecting some sort of victory lap that, they were going to be pulling troops back and this is done. But then the threat of, striking Iran infrastructure if there is no deal certainly did send some shivers across these markets. U.S. futures, Euro futures are still deeply in negative territory here right now. We'll have a lot more on the next way. In the next hour, you're watching The China Show.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death. If during this period of time no deal is made, we have our eyes on key targets. If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all. because it would not give them even a small chance of survival or rebuilding. But we could hit it, and it would be gone, and there's not a thing they could do about it.
President Trump there, just about an hour back, that primetime address to the nation on effectively updates on Iran and that they are close to meeting their military objectives, plus, of course, some non-veiled threats in the event that there is no deal.
Yeah, so it seems like there was no signal of any sort of immediate end to this war. And I think that's what markets are really kind of going with here at this moment, where you are starting to see oil is once again perked up there. Stocks are on offer. The dollar's catching a bid. So it is once again this sort of risk-off day, just given that we were hoping for some sort of victory lap, at least some sort of end in sight, an off-ramp. We didn't quite get that. In fact, I think it was that threat of hitting, Iranian electric plants if there is no deal that did shook the market a bit. Yeah,
which obviously are considered war crimes, and the fact that that was the framing of the threat, I guess, in some ways underscores that we are, I guess, in many ways, nowhere close still to ending
or reopening the Strait of Hormuz.
Reopening the Strait of Hormuz, bringing the bad blood down on both sides and within the region. Markets actually, so just a story of markets from since we woke up here in the Asia Pacific. So we did not get a very clear lead from Wall Street, although going into the speech, there was a hint of risk appetite being built in. Once the speech started, things then went south and further south once it ended and into where we are right now, 1.5% on the Nikkei 225, 3% down on the Kospi index. Oil will basically tell you everything you need to know. In fact, no, let's have a look at the Asian benchmark too. There we go. Session lows. Oil and the dollar. Stronger oil, stronger dollar coming up on your screens. We closed just above 100 on the cutoff Wednesday to Thursday in the Asia Pacific. We were trading at about 99, and then we went up to the current levels right after that speech. Bond markets, yields should be pushing higher. Last we checked, just about across the board. There we go, on your screens. Yeah, okay, so let's get more context.
Yeah, let's bring in our team. Bloomberg Managing Editor Jill Desus is with us here in Hong Kong. Plus, I want to bring in Jemana Bershetschi, our Horizons Middle East and Africa anchor, who joins us from Dubai. Jill, I'll start with you. What did we learn from this speech?
Well, we didn't really get a whole lot of new in terms of actual policy and strategic direction from Trump here. I think that market reaction, though, obviously, as you've been talking about, is really kind of a case of the rhetoric that Trump is reiterating here, right? I mean, talking about those potential strikes, those threats of strikes on critical infrastructure, I think, obviously, is something that is really, really going to make people jittery if there's that idea of even though the U.S. is trying to move out of the country, we also still have this sort of threat of escalation, right? I mean, for Trump, I guess, like, the key takeaway here is that this isn't a clean exit, right? There's no sort of, like, clean pathway toward de-escalation in Trump's mind. I mean, he goes into this, very rare primetime address with this, the bravado that's very typical of Trump, where he's talking about, these threats of hitting Iran extremely hard. That in particular seemed to cause quite a bit of jitters here. So, again, when it comes to Trump, it's just really kind of difficult to, sort of articulate your way through exactly what's going to happen because he's simultaneously threatening to increase this pressure campaign, but also saying, well, we're going to exit in a couple of weeks. So hard to get a clear read of exactly how long this is going to last just from that.
Jill, obviously we everyone else in the world saw it, but was this address mainly meant for a domestic audience?
Yeah, of course, David. So look, I think, again, there's nothing materially new necessarily in what Trump is saying in the speech, but this is a primetime address to Americans. He talked quite a bit about U.S. gasoline prices, talking about sort of short-term pain and then eventually things he presumes would get better. I think what's really important to remember is that while, we're in the rest of the world is kind of looking at Trump policy through that international lens. For Trump, the big item on his calendar this year is the midterms in November and trying to build a case for trying to, broaden or tighten Republican control. That's really, really difficult to do when the economy is not necessarily in a great place or gas prices are super high. I mean, that's something that, the average voter in the U.S. is going to really, really pay attention to. So he's got to use these opportunities to make his case to the American people for why it's a good idea for him to get involved in, international conflicts, which I will point out he spent his campaign saying that he wasn't going to get involved in. So it's a really difficult balancing act for Trump. But yeah, I think that's kind of what he's trying to do here.
And using that 9 p.m. sort of primetime platform to really relay that message that gas prices will return to normal soon. This is just a short-term blip. Yvonne, I want to bring you in. Obviously, Middle East markets are slowly waking up to this speech. How do you think they're going to respond? I mean, especially those comments about, it's not up to us now. We've done the hard work, but the rest of the world, you should go and help and reopen the Strait of Hormuz.
Yeah, well, I mean, there's a lot to unpack here. The first thing that I would say is I think perhaps there was too much optimism going into this speech on expectation that he may announce a ceasefire. And a couple of hours before he made the national address, Press TV, this is the Iranian Press TV, reported that the Iranian Foreign Ministry actually asserted they'd never asked for a ceasefire. So the language, once again, from Iran is still one of defiance. And actually, interestingly enough, the Iranian president released an open letter to the American public yesterday. He was saying that questioning whether the U.S. are actually following an America First policy, whether they've been dragged into this war. He's claiming that Iran have been acting in self-defense, and perhaps ahead of the American public, there's a key choice here, whether they want to go down the route of confrontation or the one of diplomacy. Now, of course, again, it is a lot of rhetoric coming through from their side. He doesn't spell out what the diplomatic path can look like. And also worth reminding viewers as well, because specifically in Trump's True Social post yesterday, he spoke about the Iranian President Pezeshkian. He does not have a lot of clout or influence in terms of foreign policy, in terms of nuclear decisions, and in terms of military decisions. So it is, again, still unclear at this point whether the Iranians have the appetite to come to the table. New York Times reporting overnight that a lot of intelligence suggests that they still feel that they hold a lot of cards here, especially when it comes to that Strait of Hormuz.
Yeah, Jomana, one of the other things that the president said was that they were close to achieving core, and also I think he also mentioned military objectives. Does that to you effectively mean that hostilities and the bombing and these campaigns could actually get much worse over the next 2 to 3 weeks as they near that specific conclusion?
I think that is one way to interpret what he was saying. It seems as though he was laying the groundwork for an intensification further of military operations over the next 2 to 3 weeks. And he also gave another threat to Iran. It sort of went a bit unnoticed, but he did say if a deal is not done in that time frame, then they would not hold back at hitting Iranian infrastructure, those power plants, and completely obliterating them. And this, I guess, extends the time frame for that other deadline that was supposed to be on April the 6th, whereby he also said if they don't come to the table and negotiate or get a deal across the line, then Iranian infrastructure, that key civilian infrastructure, could be targeted. So that's a threat that's still very much present on the table. But I do just want to go back to something else, because once again, he's made that delinking between what they're doing militarily versus the opening of the Strait of Hormuz. And I think it's very, very clear now that the intention from the U.S. is to have other countries around the world, those who are more reliant on oil that passes through the Strait of Hormuz, deal with that situation. And in fact, the UK Prime Minister Keir Starmer yesterday said that they're going to be hosting a meeting with around 35 other countries this Thursday to discuss diplomatic efforts to try to open the strait. So it definitely feels like other countries around the world are seeing and thinking about what they can do. But at the same time, President Trump has once again delinked an outcome to the war from the Strait of Hormuz, which contradicts some of the messaging that he put through on Truth Social yesterday also.
Yeah, and just a last question on that, Joe. So clearly there's an important meeting. That's a big group, 30 plus. I'm curious how that message is resonating in the region where you are, that slowly that message of that is opening up is on you guys and not on us. Has that become more accepted? I just wonder what those conversations are right now.
Yeah, well, as we've been reporting in the last couple of days, you definitely get the sense that for many Gulf states, Iran has crossed the red line. The resolve seems to be hardened. You heard the Saudi foreign minister about 10 days ago saying that their patience is not unlimited. More and more comments coming out from a stream of UAE officials. The ADNOC CEO yesterday likening Iran's grip over the Strait of Hormuz as economic terrorism. And so an outcome in which Iran still maintains sovereignty of the Strait of Hormuz is absolutely not acceptable. And many media outlets, including our own, have reported that perhaps behind the scenes, Gulf states are actually egging Trump on and to finish off with these military operations so that Iran will no longer pose a consistent threat, danger, or be an aggressive neighbor on their doorstep. That would not be an outcome that would be a good one for many of these Gulf states. So I think there is an acceptance that when it comes to the Strait of Hormuz, something has to be done if they can help in terms of, demining or providing surveillance drones, then they would definitely partake in that. Yeah.
Thank you so much. Our team there, Jumana Bersetchi in Dubai for us there, and of course here on set with us is Jill Desos. Just for our viewers and our clients, TLI Big O, of course we have an ongoing blog right now on the latest. So it goes everything from 60 minutes back to some of the takeaways, key headlines from the speech, into where we are an hour after and how markets have digested this, and some of the commentary that has come through from the street itself, just to really make sense of what really are the key takeaways from the primetime address.
Yeah, coming out, we're going to get the take on Goldman Sachs and what they think about this when it comes to soft commodities, right? When you're talking about fertilizer. Also, we're talking about the aluminum impact as well as the war on Iran threatens supply chains. This is Bloomberg. All right, we're checking some EV players in China here this morning. Some delivery numbers for March that did come through here. BYD certainly was the standout there, given the fact that some of their overseas exports certainly was a bright spot against what has been a very challenging domestic market. But you take a look when it comes to some of these EVs, we're mostly lower here this morning. But Chery Auto seems to be the standout here today. We're up some 5% in particular there. They were talking about year-to-date sales of more than 566,000, which is still down about 3%. Year on year, but nonetheless, the stock is still bucking the trend here this morning, Dave.
Yeah, certainly all roads lead back to the big one, BYD, as I guess a proxy here. When you look at exports, we talked about this earlier, right? Overseas sales on the company up 65%. That's for the month of March. You have these surging oil prices boosting incentives to own EVs. Let's bring in Min Min Lo, our China correspondent, here with us to talk us through the climbing exports and how domestic sales are also doing.
Yeah, it's a bit of a mixed picture here because exports are doing really well. You just go to any overseas showroom, especially in Southeast Asia, it's bustling with activity. And that's really because of the tailwind from the Iran war, right? It's causing a lot of people to think about switching their gasoline vehicles for the EVs. But then domestic sales, that's slumping by 40% on year. Total sales is down by 20% on year. It's really being weighed down by the domestic sales, the weak consumption demand here, particularly after the government had scaled back the EV subsidies, and BYD is particularly hard hit because it's always positioned itself as that cheap, affordable, at a cheap price point, right? And so it suffers from the price competition there. So the company really has to rely heavily on overseas sales. It has guided expectations higher for overseas sales. This year it's looking at 1.5 million cars, up from 1.3 million cars that it previously announced.
Yeah, and was able to surpass the likes of Geely, right? That's only one thing to watch. When it comes to Zhejiang Leapmotor, there's talks with Stellantis to build EVs in Canada. How likely is that move?
Yeah, this is according to what sources are telling us, and it's a bit of a complicated situation here because they are looking to potentially take over an idle plant that Stellantis had vacated because it moved its SUV production to the U.S. in reaction to Trump's tariff. So that was something that angered the Canadian government, which then threatened to claw back subsidies to Stellantis. So Stellantis has a few options here. It can sell that plant or it can bring in new investments to do something else there. So they're now considering bringing in Zhejiang Leapmotor, but then there has been already thousands of people who were laid off, and all these people, and remember Canada has a very mature automotive industry. So they really want to ensure that whoever comes over to take over that plant creates a full-fledged assembly plant that uses local parts, local supplies, instead of a plant that just puts together knockdown kits from China. So they're concerned about that. There needs to be very delicate discussions with the labor unions, with the local suppliers there. And then another big question mark is how Trump would react, because Trump has threatened retaliation on Canada if it makes any deal with China. And it has threatened 100% tariffs on Canadian goods. But so far, Prime Minister Carney has sort of pushed back against that with his trip to Beijing in January. He sort of agreed that he would lower tariffs for Chinese EVs if Chinese capital were to enter a Canadian market with through joint ventures with trusted partners. So Stellantis is now in talks with the government for that.
All right, Min Lo, thank you. Our China correspondent on all things EV cars here this morning. And some corporate news also, Hyundai is stepping up its U.S. push, unveiling a rugged SUV concept and confirming plans for a U.S.-built mid-size pickup. The South Korean automaker says body-on-frame vehicles will be central to its American strategy, with the pickup aimed for launch by 2030. Hyundai is betting big on the U.S. market, pledging $26 billion in investments through 2028. The Australian market regulator has released its final report into ASX, concluding that the exchange operator's risk management and compliance practices needs improvement. It also found that ASX's monitoring, supervision, and enforcement of operating and listing rules require more attention. The ASX chair, David Clark, says the ASIC report makes tough reading, but the operator accepts there is more to do and is taking action. All right, check the markets here as we get to that lunch break. In Japan, we're getting ever so closely there. Looks like here still some risk-off moves here across markets. Hang Seng as well as CSI 300 are lower here this morning, but not as big as what we're seeing in North Asia. Nikkei and Kospi are lower substantially too. This is Bloomberg.
I have a suggestion. Number one, buy oil from the United States of America. We have plenty. We have so much. And number two, build up some delayed courage. Should have done it before. Should have done it with us, as we asked. Go to the strait and just take it. Protect it. Use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy.
That was President Trump in today's White House address, and essentially saying that he expects the Strait of Hormuz to open up naturally and encouraging other nations, not the U.S., to help reopen it. In terms of what we're seeing across what most countries around the world are doing and how they're dealing with this impact of this energy shock, right? Take a look at what we saw in South Korea, those inflation numbers that came out this morning. Consumer inflation edged higher in March, rising 2.2% from a year earlier. Now that pickup comes as the Iran war drives global energy costs higher, with Brent crude jumping more than 40% during the month. The Bank of Korea is widely expected to keep policy steady at its April 10th meeting, even as higher oil prices threaten to fuel inflation and weigh on growth. French President Emmanuel Macron says France and Japan agree on the need for a ceasefire in Iran and safe passes for shipping in the region. Speaking in Tokyo alongside Japanese Prime Minister Sanae Takaichi, Macron emphasized maritime security, stable supplies of key goods, and the swift de-escalation of tensions in the Middle East. Both leaders also underscored the strength of bilateral ties and the importance of their partnership.
The collateral damage and the fallout and how economies in the Asia-Pacific are dealing with the domestic implications of just sky-high oil prices. Alongside the primetime address a few minutes, in the last hour of the U.S. president, in Australia, we had the federal government also announcing additional cuts to the fuel excise tax for the next 3 months, and that will reduce, of course, petrol prices somewhat, extra 6 Aussie cents per liter.
Obviously, there's been talks about fuel tax cuts and other ways to really cushion the blow for consumers here. But we did hear from Albanese as well this week, just urging citizens to save fuel by switching to public transport, prepare for possibility of difficult times ahead. So certainly it's interesting for a developed nation to say, take the bus here and really enjoy your Easter, but don't really try to, don't try to avoid those lines, I guess he says, at the gas stations. So, yeah, certainly it's not just Australia, right? Plenty of other Asian economies are really kind of dealing with this too right now.
Yeah, this collective belt tightening sound that we're seeing across the region. I think we've heard from South Korea several examples there. I think Singapore has also been discussing ways that apply to them. And, of course, Southeast Asia is also dealing with this. I think we had the piece out, I think it was out yesterday, that talks about, and a reminder that it is a holiday already in the Philippines. And the reason I bring that up is peak travel season actually in the Philippines right now. And it also goes to the fact that some of the travel there might actually, is for a fact, is actually being affected by high oil prices, right? So mobility is actually a key issue. And that's going to go into GDP and activity and the amount of output economies can churn out.
Yeah, and I think when you talk about, fertilizer prices are surging here, what does that mean for food production and the like? Are we likely going to see some sort of food inflation sort of, hit, right? So certainly that is going to be the big thing to watch here. We're going to have Trina Chen from Goldman Sachs to talk us through kind of what the supply constraints are at the moment here. Also kind of talk about that whole aluminum side of things here and what it means for some of the smelters in China and, of course, in the region as well. But, largely speaking, I think we've been focusing on President Trump's speech for the last 90 minutes or so. And basically, it seems like markets are, in one word, disappointed that we didn't see a clear path to peace here. We have plenty more to come. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are heading to lunch break in just a minute, and we are still seeing downside when it comes to equities and risk assets here today. It's actually the stocks as well as the currency as well as bonds are falling here in Japan. 159 levels that we're back to now for dollar yen here, and certainly the dollar has emerged once again here in the face of this President Trump speech that basically didn't give a clear path to some sort of off ramp. So certainly there's still that threat of escalation in the Middle East that President Trump did allude to here, the threat of even attacking Iran infrastructure or power plants if there is no Iran deal. That's why you're seeing stocks in Tokyo down close to 2% for the Nikkei 225. Yields are also perking higher. We're up about 2 basis points for your 10-year JGB.
Yeah, and I think when you look at Asia Pacific, and we'll have a look underneath the hood. We've managed to compile some commentary. Some initial hot takes from analysts on where they think we actually are in as far as markets and strategies concerned following the speech. The initial take on markets and just simply look at price is that certainly we are things are likely to get, this is the message from the markets, things are likely to get worse before they get better with session lows on the benchmark. I think our colleague Jomana from the Middle East, from Dubai early on, said it perfectly, right? Perhaps market expectations were just ratcheted up too high ahead of the speech, and following what was mostly a recap of what the president has said in recent weeks, more than anything new in terms of solutions to, I think, achieve strategic objectives, markets then had to pare back some of those expectations that were baked in ahead of that speech.
All right, let's bring Lanting to our Bloomberg managing editor for Asian equities. She joins us from Singapore. Lanting, it seems like it was not really the speech that markets wanted to hear. What were some of the commentary you've gotten from some of your sources, your guests here this morning?
Yeah, we did speak to tons of folks on the street. The overwhelming sort of sentiment that we gathered was disappointment. I think that's probably the right word to summarize it all. The market had gone into this speech with at least some hopes for de-escalation or some clarity around that. But Trump, as you guys mentioned, focused a little bit more on, striking Iran extremely hard in the next 2 to 3 weeks, and also threatened to strike Iran's power plants. And that certainly was the main message that investors took away from that the de-escalation that Trump sort of mentioned leading up to this speech was not going to be panned out anytime soon. So they're busy revising down their base case, which is now tilting towards a little bit more bearish than they had originally originally expected. And even with the war potentially ending in 2 to 3 weeks, or at least the U.S. exiting the Middle East, then people are still talking about how the higher energy costs are not going to go away anytime soon, just because it's a very complicated situation with the Strait of Hormuz, just because it's just very hard for it to cleanly open up to the status that we saw before the war started. So earnings will be impacted, and we'll hear from the likes of all the global companies in the next month. Actually, this month, so we're starting the earnings season in mid-April. So we'll really get a bit more clarity, and most likely companies will talk a little bit more on the impact. So any kind of equity optimism may be curbed by the kind of earnings results coming from companies.
Lianting, thank you. Lianting, too, there, our managing editor for Asian equities, the initial take from markets on what did take place. Let's have a look at where we are, and this is really one other commodity that's gotten caught up towards the latter end of March. Aluminum is down about 1%. You have, of course, this massive producer in the Middle East has halted output because of some damage there to some of their assets, and it isn't the only one that's getting squeezed.
Yeah, we talk about oil, we talk about energy, but aluminum, it is now sort of the next sort of industry to really watch out for, right? So countries are now racing to secure supplies of fertilizers as well as the conflict chokes commodity flows and heightens fears of a food crisis. And Malaysia is also mobilizing aggressive efforts to expand its import sources and secure supplies. India, too, is looking for alternative sources to shore up supplies. And the country's fertilizer supply situation has been hit by the war, but officials say New Delhi has sufficient stocks. Over in Europe, France is also asking the European Union to help farmers struggling with soaring costs. I think China was also the latest here. We heard from the Commerce Ministry saying that Beijing will purchase and store frozen pork in its central reserves to help stabilize the market. Officials say they will closely monitor market conditions, strengthen trend analysis, and use reserves to support stable operations. This really comes at a time when you're seeing hog prices domestically hit a 15-year low, with rising costs really squeezing producer margins.
I think we just showed beef, actually. I know the difference between beef and pork. Those look like beef. Anyway, that's just me.
But this is the idea of pork reserves, yes,
Protein.
in China. Protein, yes.
Think about that for the moment. When we talk about inflation all the time here in the show, there's always a read of inflation x food and energy. And when you have those two things where they are right now, it tells you how important this story is to the consumer and how that's about to hit.
Yeah.
Let's bring in, joining us here in set is Goldman Sachs co-head of Greater China Equity Research and also China Basic Materials and Agriculture Analyst Trina Chen. Good morning, and very nice to see you. So we're now talking about the potential for food inflation coming through. How is what's happening in Iran affecting everything else that you're covering?
Yes, absolutely. Middle East plays an incredible important role in the global fertilizer industry. So to set the context, fertilizer, we have three key elements: nitrogen, potash, phosphate. So nitrogen being probably the most important and basic one. That's what usually people say urea. Now, Middle East produces 10 to 15% of all these three, but also it contribute probably even unproportionately larger portion of the seaborne traded or global traded fertilizer. For example, urea, this most important one, 1/3 actually is from Middle East. So that's the first, I think, is role. But there's also indirect importance. For example, Middle East situation also affect the fertilizer production in other places in the world. 60% of global urea is actually produced out of gas. And in many places in Southeast Asia, in India, nearly 95 or even 100% of the urea actually is produced from imported LNG. So that you could see the vulnerability of those regions. There's another, I think the last thing I could think of is really sulfur. It may sound very disconnected, but
fertilizer.
Yes, and the fertilizer, sulfur is a byproduct of the oil and the gas industry, and it's incredibly important, critically important to phosphate fertilizer production. So with that actually in the picture, you could already see year to date, current spot price urea is already 70% higher than the beginning of the year. Phosphate is probably 30% higher. So that already tells you how tight the market is. Pricing is the best reflection of the market tightness, and that reflecting what is happening. Now, I think we spoke about China.
Yeah.
Now, China managing the situation, not immune, but relatively better. China is more than 100% self-sufficiency in 2 out of the 3 fertilizers. In fact, sometime in the year, China will decide to export or not.
Which of the 2 and 3?
Nitrogen and phosphate.
Okay.
Or we could call them MAP and DAP. Now, China is also, I think one of the important things China is doing literally very differently, probably the only country globally, is China produce urea out of coal. And that provide a lot of steadiness to the domestic pricing. So if you look at the fertilizer price in China, it did move up, but in much more moderate manner. So it's not immune, but this is just how different countries managing their situation.
And I kind of take it back to what we saw during 2022, during the Russian invasion of Ukraine, where you basically saw wheat prices skyrocket. I don't think we're seeing that sort of reaction this time around when you're talking about wheat, up single digits or so. This whole concern that without fertilizers, farm production will take a big plunge, and then food shortages and the like. Are those concerns a bit too much, you think? What are food stocks and looking at right now?
Right. Well, I think it's interesting you mentioned 2022. So that's kind of one historical period you could look back in terms of what high oil price that leads into. There are other periods you could look, maybe 2007 to 2008, when oil price is triple digits. Yeah. And you typically see high oil price accompanied with less usage of fertilizer and higher grain prices. Now, in some of these extreme cycles, grain price could move 50%, even more than 100%. I think the Russia-Ukraine war situation, initial response is Ukraine actually was directly a very large wheat producer. So the physical market responded that directly, but that wasn't, if you look at the 2 years after the Ukraine war, that's the year where every country in Asia talk about food security in a much more focused manner. There is a science behind this. It's essentially, there's demand elasticity of farmers on fertilizer pricing, so that's always there. But in extreme cases, when availability become a risk, then I think in places where we just discussed in Southeast Asia, India, there's additional risk coming into. Now, if you use less fertilizer, how does it impact the yield?
Yes.
Now, there's empirical study, and we also look at the Ministry of Agriculture in China. They have this guidance. You could very much see if you reduce fertilizer usage by 10%, the yield reduction could be more than 10%. So in other words, if you 50% reduction in fertilizer, you lose half the yield. That's how much impact there is. And it's even more important in the planting season, where majority of the fertilizer for the crop growth cycle is needed to be applied. So it's not evenly through the year. And we are now in the planting season for China and for many countries in Asia. So I couldn't see anything different that this time would be different than the history.
Well, my follow-up then would be, is now the planting season, and what sort of disruptions to physical deliveries have we seen?
Yeah.
Have we been in this long enough to determine that farmers will not have that fertilizer supply that then affects us 1, 2 years down the road?
Yeah. Well, I think we're still at the beginning of planting season. Okay. So we are seeing news flow, for example, in the certain countries, there's a very tightness actually in terms of fertilizer usage. Actually, China planned, in every year after May, China usually export a bit of excess urea after the planting season. But then that actually also become a risk, and because that could be a few million tons, a few percent of the global supply. It's incredibly important for some of the other countries. So I think we still have to observe. We're at the beginning of the planting season. But for physical market to respond to that, we usually would expect towards fourth quarter.
So the food crisis do you foresee some sort of food crisis, or do you think, given the fact that farmers have been doing quite well leading up to this war, that we have more buffers than, say, a few cycles ago?
No, as I mentioned, I couldn't see. Yeah. I think from an analyst perspective, if you look at all the element that's pointing to higher food prices, I don't see anything different now.
The markets are still complacent, you think?
Correct, yes.
Okay. How much higher do you think food prices can go then?
I think that very much depends on the oil price assumption. Okay. Historically, when we see oil prices over $100, food price move up 50 to 100%. So everything you guys just talk about, then that deters where we're going from here.
What does that mean for fertilizer stocks or names that are tied to that?
Fertilizer stocks, China and globally performance has been very mixed.
Okay.
I think from equity perspective, there's fertilizer side of angle, but there's also additional element. I think equity markets trying to price in beyond that is, in terms of overall economic environment. Right. But we certainly like some of the fertilizer stocks in China. I think the pushback typically for Chinese fertilizer stock is price in China tends to be more sticky. There's more government influence. But I would say they do not immune themselves from the global trend. So we particularly like phosphate fertilizer. That's even before the war, we see structural deficit in the phosphate rock market.
And are we talking mostly, obviously, when you say agriculture, things that are planted, things like wheat, for example, or do we have to then look at the second order effects on things like pork and beef, because that then goes into feeding that other cohort of agriculture?
That's right. I think if you have the grain price move, then certainly that your feed price would move on 1-to-1 ratio. Right. Soybean, corn, we've discussed that before. Whether that industry can still make money depends on in the cost inflation environment. That's a separate discussion. But we could pretty much tell when grain price move up, everything else will move up with it.
I was going to get your take on aluminum, too, which is also your coverage. We have seen some of these Middle East smelters. I mean, some of these plants have been, struck and has curtailed output of some. How long does it take to resume this sort of production? And what does it mean for aluminum prices moving forward?
That's right. This is a very, important, topic for all the investors actually in the past few days, not just in the past few weeks. I think the operating environment, for these smelters in Middle East certainly become very challenging. And they are important for the global aluminum sector. Together, I think there's close a dozen of smelters there, almost contributing 20% of ex-China supply. It's pretty nature because this is a region where cheap energy price used to be in. But the operational challenging they're facing today, and that's why you're seeing the curtailment, you're seeing the worry about the risk about further shutdown is the logistic because of the strait closure. They could not send in their input material. I think for now, market is debating how much capacity or production has been suspended. We spoke with a local smelter consultant or industry expert a day ago. I think the estimate is about 800,000 tons, but a lot of investors think it's a lot more. But more importantly, I think to the question of restarts, it takes quite a lot of time. If it's volunteered shutdown, it takes 2 to 4 months, assuming everything is stabilized. For those actually got attacked due to the drone attack, that causes what we call the pot freeze. Those takes 6 to 8 months, and that's on the requirement of the smelter has to make a decision to determine that operating environment will be sustainably stable. So that will also itself will take some time. But I thought more importantly, the bigger question in my mind is this is the region that by nature, we would expect more smelter to be built in here because of energy, advantage, and that supplies actually global demand growth in the future. But now this is under question by by these smelters, so certainly impose a risk of higher long-term mid-cycle price.
Trina, it's great to have you. Thanks for telling us as frankly as possible what the implications
That's a great story.
Of this war really has on not just fertilizer, aluminum, and the like. Trina Chen there, co-head of Greater China Equity Research and China Basic Materials and Agriculture Analyst at Goldman Sachs. Coming up, NASA has launched 4 astronauts on a historic mission, sending humans closer to the moon than any time in more than 50 years. We'll have the details coming up next. This is Bloomberg.
Booster ignition. 2, now bound for the moon. Humanity's next. Good roll pitch.
Well, NASA has launched its first moon mission in over 50 years. 4 astronauts are now in orbit in the biggest milestone yet for NASA's Artemis program, which aims to land humans on the moon as soon as 2028. Let's bring in Paul Allen. He's with us right now. Paul, I mean, it was such a milestone that even President Trump started his primetime speech congratulating, of course, the Artemis mission. Tell us a bit more of the objectives.
Yeah, it is a big milestone indeed. First trip to the moon by humans in 50 years, and it'll be unique as well because the astronauts on board that capsule are going to get a view of the moon that nobody ever gets to see, and that is the far side because the moon is tidally locked. So here on Earth, we only ever get to see the same side of the moon. But that was a seamless launch, perfect conditions. There were a couple of minor issues before liftoff which were resolved. So now it begins, this 10-day journey. The first few days will be spent in orbit around the Earth, in low Earth orbit. Tests, there will be testing of systems, testing of the manual pilot system as well, and also some experiments to see if Orion can get to the moon, potentially using a SpaceX Starship in future, where the Starship would push this capsule for the rest of its journey. But this is a long journey. The moon is 250,000 miles away. That's about 400,000 kilometers. The whole round trip, before they're back in 10 days' time, that's 680,000 miles, or 1 million kilometers.
And what's the longer-term plan beyond this current mission, Paul?
Yeah, so this is Artemis 2. The next mission, Artemis 3, will include a practice docking with a lunar lander, which sets the stage for Artemis 4 in 2028, which will mean a manned landing on the moon, the first since we've seen since the early 70s. So that landing would take place near the South Pole with a view to establishing a permanent presence. Now, the cost of all this is very expensive, obviously. It's about $30 billion at the moment. The reason for the haste, China also has similar plans for a manned lunar landing by 2030. Now, you might think, well, what's there? Well, there is plenty there. There is water ice, particularly near the poles. That could be a potential source of rocket fuel for onward missions to Mars. And there is also a very rare isotope of helium, helium-3, which has the potential for use in nuclear fuel in fusion reactors. So plenty of interest in the moon at the moment. And 50 years on, another race to get there.
There we go, Paul Allen in Sydney. You can get more on the story on our Video Hub. And finally, some conclusion and finality to the flat mooner movement there once we do get around that sphere. Lots more ahead. This is Bloomberg. Right, welcome back. A look at some of the bright spots across these markets, given the pop back in the oil price to the upside, gas also. So you have the big names, of course, in mainland China. Have a look at some of the big chips and, some of the memory plays. And Korea has been all over the place. I think Samsung had its best day yesterday in about 25 years on price itself. And this is really a good gauge of risk appetite, maybe at the very, very edge of things. Also a separate story, of course, that dovetails into this group of names on your screens. So tech is down really as, I guess, a function of just risk appetite being sapped out of this market following that speech.
Yeah, the bulls are continuing still to be tested here, given all this volatility around some of these growth stocks that certainly continue to take the beating here today in the back of that speech from President Trump.
OpenAI to the CapEx.
Yeah, OpenAI, the CapEx concerns and the like, if they're talking about this whole path to profitability. So that's just adding to the mix here on why tech is getting roiled here today. That's it for us here on The China Show. Insight with Hassan Ahmed is next. Stay with us.